All right, everybody. It is Wednesday, 9 o'clock. We are coming to you all live, and some of you all might be listening to the podcast later on. Either way, we're going to present some great information to you all today. So, what is this great information? What makes it so wonderful? Why are you all presenting it to us? Because we want you all to win. So, today's topic is what is a short squeeze and how to benefit from it? Because just knowing about it isn't enough. You need to know how to benefit from it. If you're listening to the podcast, thank you so much for listening to it. If you're watching us live, please share this with a friend. And for everybody, understand our new strategy, our new technique, our new thing is after we go live Wednesdays at 9, we're going to go live inside the Clubhouse platform to kind of do a deeper dive about money as a whole. And we definitely implore you all to come on to Clubhouse, find us, and let's have a conversation about the market. So while I do some housekeeping, Leon will give you an update on why we chose this particular topic.
Yeah, so if anyone's been following the news recently, at least any sort of financial news, you've probably heard about GameStop. And GameStop, over the last couple weeks, well, actually over the last week, is up like 700, 600 some odd percent. I mean, this stock has gone through the absolute roof. It's been, I was around for the dot-com days when stocks went up every day. Back then, stocks went up maybe 5, 6, 7% per day. GameStop has been almost doubling every day for the last week or so. It's been crazy. And the reason why people speculate that is reason behind this is something called a short squeeze. And we're going to kind of do a deeper dive into that in a minute, but just want to give a background on GameStop. So GameStop is just a company, some of you kids may know, a company that has retail outlets that sells games. They sell games, video cartridges, game consoles online, as well as in stores. GameStop is actually going through a rough period right now because of the pandemic and because they have a lot of competition now from online gaming platforms as well as other retailers. So, everything has kind of moved online, and their business was primarily before the pandemic was in their retail stores. So they're seeing a lot of, they're facing a lot of headwinds right now. But what's crazy is during a period where they're facing a lot of headwinds, their stock has gone through the roof. It's up 6, 7, 800% in the last week or two. And so some people are like, well, why is GameStop going crazy? And it's because people speculate something called a short squeeze. And Brent, when you get a chance, you can pull up the slide. And just to give a little background on what a short squeeze is. So before we can talk about that, you understand how shorting a stock works. So what all shorting a stock means is that you benefit when the stock price drops, right? We all know the quote unquote the term long is when you benefit when the stock goes up. But when you're short, you benefit when the stock goes down. And so the way that works is, because one question I always get is like, well, how do you, so the way it works is you sell the stock at a high price, buy it back at a lower price. Well, people always say, well, how do you sell something, a stock you don't own yet? Well, there's a mechanism in place. It's called shorting. And all it is you basically borrow the shares from your brokerage, you then sell them and then buy them back at a lower price at a later date, and you profit on the difference. So it's like selling a stock at $50, buying it back at $40, and you netting that $10 difference. That's what shorting is.
And to give you guys the story of shorting, imagine you had a friend that was your next door neighbor, and they said, hey, you said can I borrow your car? And they said, yeah. And they were like, we don't care what you do with the car, just get it back to us. It doesn't have to be this exact car, but a car as close to this as possible, get it back to us. And let's just for ease say it's the exact car, right? And your thought is, man, I know that this car just won 4 races and everybody's going to want this car. It's going to be in high demand. But I also know that these cars are notorious for engines blowing up. So if I can sell this car and make $10,000, and then the person or whoever I'm selling it to realizes that this engine might blow up, they'll probably sell it to me at $5,000 just to get rid of it. So as long as I give it back to my neighbor within a 2-week period, he doesn't care what I did with the car. He just wants his car back at this date, or there's going to be a consequence. And what you can do in between there, your thought is, it's a really hot item right now. I'm going to sell it, and then I'm going to use less money to buy it back later and pocket the difference. That's what short selling is.
Yeah, and a key distinction is, so we all know and this is a very important point. We all know when you buy a stock, you first it's what's called buy to open, right? So to open your trade in, say, Microsoft, you buy the shares to open the trade up, right? Well, in shorting, you open it's called sell to open, right? So you sell the stock to open it, and then when you close the trade, you buy it back at a lower price, again pocketing that difference. So just remember, you're selling to open the trade. So here on the screen we have a few points, just kind of breaking down what a short squeeze is and kind of what's going on with GameStop. So as I just said, remember, when you open a trade with shorting, you sell to open, right? So what a short squeeze is, all it is when short sellers close positions by buying back stock they sold short, which then pushes the price higher. So the way this works is, we all know that when you buy something, we have a lot of people buying any one item that bids the price up, right? So what happens is and another piece of background is, short sellers lose money when the price goes up, right? Because remember, they're going to profit when the price goes down. So if the price of the stock starts moving up, they start to feel pain, they start losing money. So what happens is, when the price moves up, remember, to close their trade, they have to then buy the stock back. So what a short squeeze is what they say when shorts get squeezed is, what they mean by that is, the price of the stock starts moving up. So then what they have to do, they have to buy back the stock they sold short to close or cover that trade. And by buying that stock back, they're bidding up the price. So when you have millions of people now buying back the stock, it's pushing the price higher and higher and higher. So it's like it actually works against short sellers to buy their own stock back. But all the thing they care about is like, get me out of this trade. I sold it at 50. I wanted to go to 40, but now it's at 55. I'm feeling pain. Get me out. So they start buying the position back to close the trade out. And all millions of people do this. Buy. It pushes the stock further and further and further up. So second bullet point is GameStop. GameStop is the poster child for short squeezes, right? So what's been happening the last few weeks and just this month is that shorts are, quote unquote, getting squeezed. As this thing is moving up and up in price, these shorts are like, oh my God, get me out of this trade. And they're buying and buying and buying their shares back, which is then pushing the stock up even more. So it's like a self-fulfilling prophecy that every time they buy to get themselves out, they're pushing the stock up more. Any shorts that are still in the trade are getting hurt more and more. And then they start buying to push up and pushing the price up. So it's just a vicious cycle that when shorts get caught, they can lose a lot of money quickly. And the third point kind of shows that. So on 1/4/21, January 4th of this year, the first trading day of the year, GameStop closed at $17.25. Just today, the stock closed at $347.51 for a 1,941% return in 3 weeks. Remember, the stock market on average returns 10% per year, 12% with dividends. This stock has returned 1,900% in 3 weeks. To give context around that, give kind of visual, if you had invested $1,000 on January 4th in GameStop, today that $1,000 would be worth $20,000 in 3 weeks. I mean, it's just this short squeeze has been we've never seen, like I said, the dot-com days, you saw a little bit of this, but nothing to this extent. We have 1,900% return in 3 weeks. And to show the pain short sellers have felt, short sellers have lost $5 billion on their short positions. In other words, that stock has been rising, going against them just since January 4th. So $5 billion has been lost by people that try to short the stock in just 3 weeks. And so, as Brent said, how does this benefit us? Well, Brent and I do not condone or advocate short selling, because it is a way to lose money fast, as you see. 1,900% in 3 weeks, $5 billion lost by a bunch of investors. But if you want to play this game, which is, we're all adults, if you feel like you can do this, what you want to look for, stocks with what they have, which is called short interest. What all that means is the number of shares that are outstanding as far as what's called the float, or most shares may have, say a company has like 10 million shares out there that can be bought and sold. The short interest gives you the percentage of those shares that are sold short. And typically, any stock that has a short interest of 10% or higher are considered candidates for situations like this, where you have a short squeeze that comes in, and then these investors get scared, they start buying, pushes the stock price up, and you get this short squeeze. So if you find stocks that have high short interest, you want to play this game, put a little money in there, and be very little, let it sit in there, and see what happens. see if you can get a 1900% return in 3 weeks like GameStop. And just want to make the other point. What's happening in GameStop is I don't think anyone's ever seen before. So this is very, very, very rare, but it can happen. As we see, it did happen. But we don't condone it any way, shape, or form. But again, if you're looking for this, look for stocks that have what's called short interest for their outstanding shares.
Yeah. So for me, I was looking at this like I might actually short this stock. And as Leon said, we normally do not do this. I normally do not do this, but nothing has changed with the fundamentals of the company. It's still awful. And so the fact that it's running up is truly it's just people panicking and trying to reverse their positions that they had when they were shorting the stock. So looking at that and looking at the fundamentals, again, looking at the fundamentals, but we're looking at it for a different reason. Nothing has changed about the company. The only thought I had, and I'm not sure if you went down this path, Leon, is I thought about the fact that the company has not had the capital to do the proper revamp that it needed to in order to stay relevant. And because of this artificial boost of its stock, really it's just short sellers trying to not lose everything. Will this give them the boost in revenue to make them say we have enough money to fix it? And that's the only thing I've thought about. Did you think about that?
Sorry, say that again.
Thinking about the fact that the company may now, because of all this revenue that came from the stock being overly inflated, has the money now to pour into research and development to figure out how to make GameStop relevant again.
Well, so I was watching something on the news this morning about this, and so the one way people are saying, okay, how can GameStop benefit from this? And so their stock price right now is ridiculously inflated, right? It's worth 1,900% more than it was 3 weeks ago. So what people were saying was one way they could benefit is by using their stock. So what companies often do is they'll use their stock as currency to buy other companies. Mm-hmm. It'll be like a stock deal or a stock swap. And people are saying, well, look, their stock is worth a ton of money right now. They can go out and buy any company they want. Problem with that is everyone sees what's going on with GameStop and everyone knows it's overinflated. So there's no startup out here or no public companies that's going to take GameStop stock as currency to buy them out because they know it's inflated. In another tomorrow, this thing could drop 90% because it's not worth as much as it is right now. So everyone is basically saying there's really no benefit for the company because they're kind of caught in between. Do they use the stock as currency to buy their things, but the market knows that the stock is inflated, so companies may be like, well, I want cash, not your stock to buy me out. So yeah, I mean, GameStop is they're trying to run their business, and all they're hearing about is their stock every day running up. And one other point I want to make is, so there's so people that are familiar with Reddit, right? Reddit, the website. There's something called a subreddit inside Reddit, and it's called Wall Street Bets. Mm-hmm. And this is the group, this forum, they're being credited with driving the stock price up.
Yeah, I saw that.
Because there are a bunch of short sellers on Wall Street, professional firms that came out with reports saying this company is crap. We're going to short it to zero. It's not even worth the $17 it's trading at. And you had this group called Wall Street Bets. Again, they're just like me, just people sitting at home trading stock. And they're all like, basically, screw you, big Wall Street man. We're going to stick it to you and we're going to bid the stock up. So what they're calling the Reddit rebellion, because what they're saying is that it's these small time retail investors like us, just everyday investors who are now sticking it to Wall Street because Wall Street thinks they know everything. And they're saying these small timers like, nah, we know more than you all did. We picked all the travel stocks at the lows in March. We've been in Tesla forever while Wall Street's been saying, oh, Tesla's overvalued. So they're saying it's like this rebellion of the small time investor against the big cats, the fat cats on Wall Street. And if anybody wants to look it up, it's called Wall Street Bets on Reddit. So funny thing today is that actually, because they're getting so much media press and there's rumors that the SEC may investigate them for collusion for manipulating GameStop stock, that they actually turned their group private today, I think like an hour ago. So before you could have went in there, just read all the posts from everybody that's in there. But they turned it private now because they're worried about possibly getting investigated by the SEC.
Yeah, well, I mean, in this space, if you're thinking like, what do I do with this information? Like, what does this mean? It means the stock is highly inflated. It's the fundamentals of the company haven't changed. It still is not horrible. It's still not the best company to invest in, and at some point the market will correct. So, what do you do until then? I wouldn't, if you're a new investor or you have, this is an ideal situation for curious money. I wouldn't even use like risk capital on this because this is unprecedented. So in this space, know that whichever direction you go in, it's some people that still want to jump on the bandwagon and see how high they can ride this thing up. It may still have some higher trajectory to go to, but who knows? Who knows when this ride will stop and come crashing down? So yeah, just be careful.
I wouldn't. Only way I would test this thing is with options. If you want to go long it, you hope it goes up more, buy calls. If you wanted to bet it'll drop after this, buy puts. But by doing that, you limit your risk. You can only lose what you paid for the option. Whereas if you actually short a stock outright, you can actually lose more than your investment. So if you want to play this game, which again we do not recommend, but if you do, again look for stocks with short interest, and I would play with options.
Yep. And with that being said, please, if you want to join IEA, kick off the new year, you still have a few more days inside of the first month of 2021 to get serious about your finances or just to learn something else about the market. Our ecosystem is over 80 plus now, and we're still growing. So you can go to IEAmembers.com. Please take your time, look through it, make sure it makes sense for you. We really want people who want to know more about the market and who are ready to invest, not people who are checking it out because Leon and I said, go check it out. Make sure it's something you want to do and it's something that will make your life better. If you are in a savings account, exactly.
Get out.
Alone. I will
get out. Please get out of the savings account.
I was going to do the long pause right there. So with that being said, we owe you all some picks. And I will go first. Let me see.
All right.
My pick today is a company called JFrog. They recently IPO and they are in the development space. Now, for anybody looking at the symbol, it is actually frog, FROG, and it's JFrog. Ticker symbol is frog, FROG. The stock is currently trading at $69.93 as of January 27, 2021, and is up 12 cents, which is equivalent to 17.17%. So a little under 0.2% up for the day. The reason I like JFrog is it's all about automation. It's all about artificial intelligence. And from a standpoint of a small cap company, because they only have a $6 billion market cap, they're like right there at the line. They're a bigger, to me, they're a bigger small cap company. Some may say they're a smaller mid cap company, but in the space of them having 6.3 billion as a market cap, the technology and what they're doing, I really like. Let me see if I can pull up the profile. And so, like I said, they're in that DevCom space and DevOps. So it's a platform to achieve continuous software release management platform, enabling organizations to deliver software updates across any system in the United States. A platform acts as a bridge between software development and deployment, which enables organizations to build and release software faster. If anybody, it's more to read, but overall what it's saying essentially is their technology allows software companies and developers to deploy new software across multiple systems more efficiently. Anytime I'm looking at a company, one of the questions I ask is, can it service a million plus or really $1 billion plus people? This software can. Also, from an automation standpoint, since it is software based in itself, it can go further than physical manual labor. Anybody producing physical manual labor, and I think where we're headed, software, artificial intelligence, it's the future. And artificial intelligence is here and it's just going to get bigger. It's not coming anymore. It's here. It's just going to get bigger. And JFrog, I believe, is going to be well positioned in that artificial intelligence space to make businesses grow more efficiently and faster, which is going to drive more money to those companies. Therefore, they're willing to pay JFrog a handsome fee to make sure that they're a customer of theirs.
All right. Hey, Brent, were there any questions?
You
see?
I don't know.
Thought so. Okay, so my while Brent's looking that up, my pick is Snowflake. Snowflake is the largest software IPO ever. They came out a few months ago. It was this was the talk of the world in the finance world, the IPO world a few months ago. So I actually have a little intimate knowledge of Snowflake because right now I'm actually building an application or I'm building an app for something right now. We actually looked at Snowflake to host some of our data. So what Snowflake does is it's really, so they host what's called a data warehouse in the cloud. And what data warehouses do, they essentially allow you to store data and then run analysis and analytics on that data. And this was done historically, on site, on premise. Companies had, big servers and computers at their offices where they actually ran this information or ran this analysis. But now you can actually do it in the cloud in real time via Snowflake. So Snowflake is kind of a game changer in the data warehouse world. That's why it's the largest software IPO ever. So like I said, we looked at it as a solution. We'll say we did not go with it because it's crazy expensive. And Amazon Web Services offers a similar product for a lot cheaper price. So we went with AWS, but I know why Snowflake is killing it because they charge a premium price. And from what I saw, we investigated it and the research that we've done, it's worth it. It's not something we need right now for what I'm working on. Amazon Web Services work fine, but Snowflake it's a phenomenal technology. Background on some of their numbers are they reported $160 million in revenue in the third quarter of last year. That was up 119%. And for the fiscal first quarter of 2021, they reported revenue of $401 million, and that was up 129% from 2020. So they are killing it. They're not profitable yet, which is fine for startup software companies, but they are killing it as far as revenue.
All right, so everybody, if you would like to, the question came in, is JFrog a GitHub company? GitHub is its own company. GitHub was recently acquired by Microsoft.
Microsoft, yeah.
It was Microsoft, yeah. Like, what was it? It was a couple billion, right?
Yeah, I think it was, a few billion.
It was at least 5 billion. It might have been like 8 billion, somewhere in that space.
It seemed like 2 and 10, yeah.
So no, they're not the same company, but they do both provide software that makes the development and implementation of software platforms easier. Mm-hmm. All right, so everybody, please join us over at Clubhouse. Look for Leon Noble or Brent Simpson. If you're interested in becoming a member of Investing Education Academy, you can go to iamembers.com. If you're listening to the podcast, know every Wednesday after our 9 o'clock on Facebook Live, we do go over to Clubhouse around the 9:30, 10 o'clock time frame, and we just have a deeper discussion about money, stock market, the stocks that we picked, the information that we provided, just money in general. So we hope to see you there. Thank you for listening, and let's have an amazing and profitable 2021.